Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. President Lee Jae Myung's first month in office has been defined by urgency and action. On day one, he chaired an emergency economic task force, pushed through a multi-trillion-won supplementary budget, and laid the groundwork for structural reforms. Early indicators now point to regained market confidence. Consumer sentiment is up, and the KOSPI crossed the 3,000 mark for the first time in over 3 years. But external pressure is mounting. President Trump has announced the U.S. will begin sending tariff rate letters to countries starting July 4th, warning that those without finalized deals by the 8th will face higher duties. With Korea still in talks, it's a critical test for the administration's trade strategy. In our fourth installment to mark 1 month of President Lee Jae Myung's presidency, we turn to the economy, how the administration is responding to public anxiety, and what early moves signal about its broader economic direction. To help us break things down, we are joined by Jin-il Kim, professor of economics at Korea University, here in the studio with us. Welcome, Professor.
Thank you.
And also joining us online is Hwa-kyun Kim, professor of banking and finance at Texas A&M University's Mays Business School. Good to see you again, Professor.
Thank you for the invite.
Right, so let's start with Professor Jin-il Kim. Now, like I said, President Lee's first month has been a blitz. Emergency meetings and supplementary budgets in 2 weeks. How would you assess this fast-paced approach?
The last month was, as you said, the blitz. Actually, I first learned the word blitz when I was in the States watching football. And Hwa-kyun is Texas A&M, so he knows much better than myself on football. Blitz is when the defense team just run to the quarterback. It's very risky, very fast speed, and that's what the current administration is doing. And up to now, the administration has been doing pretty well. But as you mentioned, the external forces are not so friendly. Yeah, it's not really bad, but it's very fast moving and very volatile. But that's true for the whole world.
Right, and a lot of factors are factoring into the current situation. Now, building on this momentum, at his 1-month press conference yesterday, President Lee pointed to the KOSPI's rally as one of the administration's early wins. Just 2 weeks in, the index broke through the 3,000 mark for the first time in 3.5 years. Professor Hwa-kyun, what message did this send to the financial markets, and how have they responded overall?
So typically when the new government is entering, then we tend to see the honeymoon period of like stock market going up. So in this case, we now see this kind of thing. And also the biggest factor of this, the big increase, I think, of KOSPI index, I think, is the political uncertainty of Korea has been largely resolved. And this message has been well received by both domestic and foreign investors. And while there's no clear economic meaning, certain even numbers such as like 3,000, 4,000, or even 5,000 work as psychological threshold or anchor that signals to investors, in this case, both at home and abroad, I think, as a good message that Korea is back on the map for investing, especially in terms of stock market, I think. Obviously, the market interprets this rally as a validation of the administration's market-friendly reforms. Early policy moves such as like strengthening shareholder rights and probably changing the tax systems to encourage the dividends and payouts to investors. And I think those kind of things overall has been seen as like a pro-investor approach of the capital markets. So that together with this, the resolution of uncertainty about the political system of Korea, I think it works positively. As Professor Jin-il Kim mentioned, obviously the sustainability of this is going to depend on the continued improvement of the corporate earnings. After all, the stock price is going to be basically earnings divided by this discount. So discount part is probably somewhat improved, but whether this is going to be really seen as the improvement of the earnings is going to be important, the test for the government's the future as well as like a stock market.
So we'll have to see if this momentum continues. Now, so it's not only just the stock market that's reacting. Consumer sentiment is also hitting a 4-year high, Professor Jin-il. From what you have seen, do you think that this indicates that households are starting to believe that, the economy is rebounding?
Right. As Hwa-kyun just said, the stock market has reached some ground, and sentiment is what matters before it's transferred to the bottom line numbers like the earning numbers. And I can tell that there are a certain rebound of the sentiment. And even the Seoul traffic is a little bit busier now than a few months ago. Of course, the last 6 months up to last month was an exception, but relative to that period, some sentiment is coming back. Whether it is transferred into the real thing or transformed into the corporate earnings and the real activities, so that depends on the policy and how well those are timed with each other.
So the shift in sentiment does really stand out. Now, let's turn to the latest appointments, Professor Chin-il. Key cabinet nominations, including the finance minister, have been announced. With this new economic control tower by the Lee administration, what stands out most for you?
So with some basis of the new administration, I think if I summarize or if I say what stands out the most, make pragmatism is what stands out the most. As you said, for the finance minister and other people in the economics team, both in the cabinet and the Blue House, I think both the experience matters a lot. So President Lee they constructed the team based on 3 different the background. One is, of course, the civil servants, and the second is probably the businessmen, which is different from the 2 previous administrations. And the third one is probably advisor, and he's relying on quite heavily on the businessmen and other people, as well as the professors. And there are some professors I know in the background, but he's doing very pragmatic way of combining the team based on who really could do the work. So I would summarize that as pragmatism. And if I go outside of economics team, and then probably your news may have covered a few appointments, which is not a really appointment because they are transferred from the previous administration. And that shows how much pragmatic he could be. And then, of course, that should be shown in the records and the results. And that will drive up the consumer sentiment again. And that will determine the next 4 years and 11 months.
Right. So President Lee's pragmatic approach has expanded from diplomacy to economy as well. Now, on the global front today, we've been hearing some news that tariff negotiations with President Trump, it has still remained as the biggest diplomatic and economic hurdle. President Trump has announced starting as early as July 4th, the U.S. will begin sending official letters to countries detailing the tariff rates they will face. Now, against this backdrop, Professor Hwa-kyun, what is expected for South Korea, and how should we interpret Washington's latest move?
So clearly, if not permanent, I think this move marks a significant turning point in our economic relationship with the U.S., and obviously needs more attention. And that's where the dilemma of the President Lee and the new Korean government regime is going to face. So in terms of expectation, obviously it's important to recognize that our key industries, such as automobile, steel, semiconductors, and some other related areas, are at the center of these negotiations. And although there was a pause for 90 days, there will be a high chance that the Korea is going to face tariffs up to 25%. Hopefully it's lower on these products. So what matters from now on, given that these tariffs are all over the place, all over the countries with somewhat differential tariff rates, what matters is going to be the relative difference. So at the end of the day, tax is tax. So it's like a sales tax to the US. Then if it is somewhat lower, I think that's going to be good. As long as it is lower than other countries, it's not going to be as hurtful as it looks. So I think the South Korea should actually really focus on how to reduce this kind of thing, assuming the worst case scenarios. And negotiations, obviously, with Washington have been tough, as President Lee also himself has admitted, I think progress has been slow and unclear what exactly the U.S. government is wanting. I think it is probably like because they're pressing on like non-tariff issues as well as tariff issues. So it's like overall sort of things such as American beef, digital service regulations, and network usage, and many things. So if the counterparty is the U.S. is asking for many things, the the tactic should be more like you have to break this down into smaller pieces and give like more quantitative numbers. And also the good history of like this free trade agreement, how actually beneficial it has been, because many Korean investors after all buy back like the U.S. stocks and treasuries. So that means the U.S. dollars coming back to Korea actually move back to the U.S. by investing in the U.S. That kind of things actually should be clearly mentioned with the numbers. At least that way, the South Korea probably can reduce the damage, and so that it still maintains the competitive edge against the trading partners.
Right. So trying to get a relative low compromise would be important. Now, there are a lot of efforts being made in this front. And in fact, South Korea's top trade negotiator, Yo Han-gu, is heading to Washington promising, fair terms. Professor Jin-il, what kind of strategy do you think is needed to avoid, higher tariffs?
So that's the tough
Of course.
part for the chief negotiator. While I was waiting in the room, I heard the news that the Minister Yo was leaving for the airport in the afternoon. So he must be in the plane now, or if not, that he's waiting at the Incheon airport. So one thing is that he's going to Washington, D.C., and I know that we have only one direct flight to Washington, leaving in the morning from Seoul time. So he's not taking the direct flight, which means it shows how urgent it is. So if he's taking tomorrow morning flight, it's a direct flight, convenient, but he doesn't have that luxury. So he's going there through Atlanta from New York, and then having one night's sleep, even though it's tough because of the jet lag. So he still needs it. So it shows how urgent it is, how tough his job would be. And as the Hwa-kyun said, the notice from President Trump can come any day. So it's very last minute. So kind of giving what at the last minute and getting what, that's a very tough, but that's his job as a chief negotiator. And he has a record of the few years or decades of doing the job. So I hope he's getting what Korea will need in the next, not just 5, but the next 50 years.
Right, so the window's really tight at this point.
Yes.
And let's really hope for the best.
Right, so he will arrive in 15 years. And then, as you said, it's July 4th now, and then for maybe early in the morning for Professor Kim in the US. And then it's their holiday, the Independence Day, and they have a very big firework in Washington at least. So Mr. Yo may be able to watch it, and then I'm sure that they will. His counterparts, the U.S. counterpart, will bring him to dinner somewhere, watching the firework from the Washington Monument, and then I hope he can celebrate, and then and then I hope that's a good news for Korea. Yeah, in the foreseeable future.
Let's hope the talks go well between the two sides. So even if this tariff tensions are very strong right now, Korea posted a record June exports up more than 4%, powered by semiconductors and autos. Professor Hwa-kyun, what's driving this export rebound in the face of mounting U.S. trade pressure?
It's good news, but it's not good news in front of this type of the negotiation deal, right? Because the trade imbalance is the main kind of culprit of this type of talk. So having said that, clearly the main driving force probably is from semiconductor sector. There are a lot of pros and cons, setbacks and things like that, and also competition with China. But still, the semiconductor is one of the most important products that Korea is producing, and in a very almost in a proprietary way. So clearly this has been be a big contributor of this export. And while because of the oil price dropping, the imports actually has been dropping. Therefore, we see the larger surplus in June. So I think that's an important notable point. But still, the demand for chips has been very steady and strong. And also because of the demand elasticity being low, despite these the higher price probably because of the exchange rate, still the U.S. Factories and firms actually still buy the Korean-made chips, and that's one of the reasons. The second one I think is automobile, as you mentioned, and probably for the last 10 years, even in Texas here, where many people drive like Ford F-150 trucks and things like that, I see more and more the Korean cars actually driving down the road. So that means the demand shifts indeed occur. So many actually the U.S. consumers start actually preferring the Korean cars. So when the demand actually increased, then what can we do? The exports increase. So that's actually one of the the also important reasons. Of course, also worth noting that some of the export may surge because of the companies accelerating shipments ahead of the July 8th U.S. tariff deadline. So possibly it can go down, I think, in July and August, because the larger shipments has been already made. Therefore, it could actually come down later.
Thank you for expanding up on that, Professor Kim. Now, let's turn to domestic affairs, Professor Chin-il. The supplementary budget has passed the National Assembly subcommittee, now at 31.8 trillion won, which is 1.3 trillion won more than what was first proposed. But with the debate still swirling over things like universal coupons, what are the key challenges for the Lee administration right now?
So it's a very fast approval from the subcommittee, and then we heard it was being debated right now, half an hour ago, and maybe it's still being debated. Yeah, and there are many issues. First, the good news is that they're talking to each other and they're trying to get to a consensus. That's a good news. And they are discussing about the details right now. Of course, the details matter. Actually, the details are the ones that matters the most. As you know, the devil is in the details. And that's exactly true in this kind of the budget bill. And you mentioned the universal consumer coupons, and whether that's universal or selective, and that they are doing in a kind of step function way. And there are many different ways of doing it. And as far as the Congress agrees, there's no exact answer for that. And they try what they are kind of intending to do, and they should be very clear about what they intend from that, the details, the function. And let's see how it is achieved or not. Let's evaluate and that to do the right thing in the next step. And rather than talking too much about the philosophy of the universal versus selective, we should focus on the details and then how people will consume and design it such that we can evaluate in the future so that we can see what would be really done. There's a whole range of debate. You heard mentioned about hotel economics on the one end, and then no effects, perfect crowding out on the other. The truth is somewhere in the middle, but we don't know until we experiment. And this is a rare chance of experiments in macroeconomics, and that matters not just for economists like me and Hwa-kyun, but it does matter for the Korean society at the moment.
Right, so we will be able to get a clearer picture of that in the coming hours or so. Now, finally, before we let you go, Professor Hwa-kyun, looking further ahead, President Lee has vowed to modernize Korea's capital markets and usher in a new KOSPI 5,000 era. In your view, how feasible is this goal and what steps are needed to get there?
I mean, Korean market has been really, really depressed in some sense, despite the growth potential. So I know that people always complain about the low growth of the Korean market, and especially in competition with China and other emerging markets. But I mean, if you look at what the Korea actually is exporting, such as semiconductor chips and automobiles and other manufacturing, as well as the fancy, the high level industries, I think the growth part should be really high. despite, because easy like in a big tax, but despite that, I think it's been really depressed and suppressed. So in that regard, the modernizing these type of the rules and the shareholder rights and things like that, it's a good news. So the Korea discount can be reduced. That will be amazing. 3,000 to 5,000, I think it means like almost like 70-80% increase. That means within 5 years, you should see like 20% increase, like a 15-20% increase every year. So it's going to be somewhat, a difficult goal. Although I think, about 30 to 40% increase is definitely doable with the amalgamation of like the new macroeconomic policy and also the renewal of the rules and commercial laws that actually help the investors scoop their gains and things like that. So I think 5,000 level is a little probably high, but at least, somewhere in between definitely is doable, especially if the Korea discount is going to be reduced. After all, I think, Korea is selling the most advanced products.
Right. So President Lee's first month laid down a bold agenda, definitely. Now it's about execution, both home and on the global stage. We'll keep close tabs on that. We'll have to wrap up our discussion at this point tonight. Thank you so much for your time and for your insights, Professor Jin-il.
Thank you.
And Professor Hwa-kyun. We appreciate it.
Always a pleasure.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.